Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers or crazy, insane, uplifting, empowering, educational. I'm going to let you guys choose what it means to you. But as expected, canceled contracts are surging across the nation at historical levels, which is more and more proof that the housing market bubble was created from demand and not supply. And what that does is put big risk on new home builders especially. And that's why I believe that we are going to start getting the deals of our lifetimes from new home builders over resale homes, obviously minusing flip houses, which come from new sales. But what we're going to do today, y'all, is we're going to unpack an article from Redfin titled, "The Deal is Off. Home sales are getting canceled at the highest rate since the start of the pandemic." Now, real quick, you guys, I have to say this. I am not a financial advisor. Even if I want to be yours, I am not a financial advisor. But my bio is, you know what? My bio is as a father of four, 3 at home, 6, 3, and 2, a husband, a current renter, an investor, and a person that made bad decisions and became a victim in the 2008 housing market crash. That's what you need to know about me. Yes, for my work, I do work in real estate, but that's who I am on this channel, and I hope you guys realize that. Regardless, you guys, we're going to get started on this article right now. Okay, the article starts. Some home buyers are backing out of deals as a slowing housing market gives them more room to negotiate. Others are forced to cancel on contracts because higher mortgage rates mean some homes are no longer affordable. Nationwide, roughly 60,000 home purchase agreements fell through in June, equal to 4.9% of homes that went under contract that month. That's the biggest percentage on record, with the exception of March and April of 2020, when the housing market all but ground to a halt due to the onset of the coronavirus pandemic. It compares with a 12.7% a month earlier and 11.2% a year earlier. So 14.9% of homes that went under contract in June fell through. Is that not shocking to you guys? Almost 15%. Now, again, that's demonstrating that demand is the reason why we're in this housing market bubble. It also explains why the interest rates going up have been so effective at cooling down our housing market. Because remember, you guys, interest rates being an average of under 6% is historically low. Yes, it's 13, 14-year high, but for the last decade or so, we've been in an era of super low interest rates. So the fact that a 5.8% interest rates, the housing market starts to crumble should explain and show you guys that the housing market really is built on a house of cards, artificially created by the Federal Reserve and the government because of COVID and the lockdowns. So when you take those things away, when you take cheap money away, when you take free money away, the housing market comes crumbling down. What we went through was completely unnatural. Because it was unnatural, it broke the fundamentals. It broke the fundamentals of the housing market, equity growth, economic factors. It's a big mess. And that's, again, why in such a short amount of time, with rates still under 6%, we are already cracking at the seams. Let's continue on with this article right now. Okay, take a look at this graph, and it's going to be important to note that cancellations are above pre-pandemic. Let me explain what this is. Deals in the housing market are falling through at fastest clip since 2020. Monthly pending home sales that fell out of contract as a percentage of overall pending home sales. So that's what this graph is, or chart is right here, y'all. And it goes back to February 2017. So prior to the pandemic, obviously canceled contracts were well under 15%. You can see the line here. Then we went into lockdown mode. It spikes up. We get out of lockdown. It spikes down to normal. Then it plummets here, goes up, goes down, and now it's starting to skyrocket up. And I believe as we go into 2022, you're going to see this trend of canceled contracts continue this trajectory upward, essentially meaning that more and more people are going to cancel contracts because, remember, The Federal Reserve has already told us more tightening is going to happen. And you guys, when we get the new CPI numbers and it shows that we're not at peak inflation, the Federal Reserve is going to have no choice but to do additional quantitative tightening, raising of the federal funds rate, selling mortgage-backed securities. The 10-year Treasury will probably go well over 3%. That's probably going to happen this week. In fact, it already went back over 3%. So do y'all see what's happening here? The writing is on the wall. We have the data. We have the trends. We have the trajectory of those trends. Do y'all see that it is more than just supply? If this bubble was created by demand, by low interest rates, when you remove that, it comes crashing down regardless of supply, because we are not in the situation because of supply. The Federal Reserve opened the floodgates of demand. Demand has always been red hot. Everyone wants to buy a house, but not everyone earns a house. Think about that. Like in 2008 through 2002, so 2002 to 2008, they deregulated lending standards, once again opening the floodgates to demand. Do y'all see this is actually kind of similar to our last housing market? Only this one is way more difficult to understand because we have never been in this situation before. Let's get back to the article right now. Okay, so we're going to finish out this article right now. This is according to a Redfin analyst of MLS data going back through 2017. Please note that homes that fell out of contract during a given month didn't necessarily go under contract that same month. For example, a home that fell out of contract in June could have gone under contract in May. The slowdown in housing market competition is giving home buyers room to negotiate, as is increased inventory. Let's continue. Which is one reason more of them are backing out of deals, said Redfin Deputy Chief Economist. Buyers are increasingly keeping rather than waiving inspection and appraisal contingencies. Thank you, God. That gives them the flexibility to call the deal off if issues arise during the home buying process. Mark continued, rising mortgage rates are also forcing some buyers to cancel home purchases. If rates were at 5% when you made an offer but reached 5.8% by the time the deal was set to close, you may no longer be able to afford that home, or you may no longer qualify for the loan, right, guys? Because of debt to income ratio restrictions. One of the things with the loans these days, the loans have super tight income restrictions. So any fluctuation of DTI or increased payment is severe in the lending industry. Because again, remember, it's not like 2008 to 2002, where lending restrictions were all but nil. You could state your income. Fast forward to today, the slightest change, again, in interest rate or payment, massive effects on the housing market and the lending market. Let's continue. The housing market has cooled in recent weeks as the Federal Reserve has boasted about interest rates in an effort to quell inflation. That was given house hunters more freedom to seek concessions from sellers, but higher rates also make housing less affordable. Buyers did get a reprieve this week when the average 30-year fixed rate mortgage fell to 5.3% in the largest one-week drop since 2008. But don't hold your breath, you guys. Do not hold your breath. The 10-year is already going up, and they're going to meet, and the Federal Reserve is going to meet again this month. CPI is probably higher than they anticipated, so they're probably going to do a massive rate hike to the federal funds rate again. Let's finish out this article. When mortgage rates shot up to almost 6% in June, we saw a number of buyers back out of deals. A Redfin real estate agent in Miami said some had to bow out because they could no longer get a loan due to the jump in rates. Buyers are also more skittish than usual due to economic uncertainty. And you guys, that is a really good thing, because remember the fear of missing out that was all over the buyer's market? That is now at an end. In most markets, there are still some local markets where it is out of control, but for the most part, we are seeing all of that evaporate. In fact, like I have been saying, and it's no surprise to me, that fear of missing out is now shifting to the sellers, and that's going to actually continue. Sellers are going to ask themselves, is it too late to sell? The immediate answer is it depends how much profit you have in your house and what you're going to do afterwards, because home value is still, in my opinion, greatly overpriced. So it's still an okay time to sell, in my opinion. But as we go on throughout this year, you guys, it's going to get worse and worse and worse because the thing that propped up this housing market is no longer there. So there's nothing propping up this housing market anymore. Now, in conclusion, what I want to do is put something in perspective. So when the average interest rates went to 5.8%, that's when cancellations spiked. They haven't spiked that high since lockdowns. So what that means is the interest rates being at an average of 6% is almost equal to our entire country being locked down. Think about that. So interest rates at an average of 5.8% is almost as strong as being in complete lockdowns. And here's the thing, a 5.8%, you guys, is not even that high. So that should tell you right there alone how weak our housing market actually is and how you should sit on the sidelines like I'm doing to allow it to fall apart, allow the housing market to reset, then go back in and purchase real estate. I personally believe it is an amazing investment for almost all people. Now, having said that, some people are still going to want to buy, but generally the people that are buying right now are going to be investors or high cash investors that can afford to hold on to the house for 10 years as we cycle back around into increased equity once again. But that's going to take some time. And my biggest worry is not for the investors. My worry is for the first-time home buyers, right? That have not done this before. Because again, the biggest problem, the biggest risk at buying a house that's overvalued and it going down in value is being trapped. And if you're trapped, you have a foreclosure. If you have a foreclosure, you can no longer invest for 7 to 10 years. But not only that, like what happened to me in 2008, I was also issued a deficiency notice of $180,000. So not only was my credit trashed and I lost everything, I now owe the IRS 180 grand for the deficiency from the bank that sold my house for under what I owed. Do y'all see the risks here? So again, this is what I'm saying. If I'm wrong, what happens? Okay, you should have better credit. You should have better spending habits. You should have stronger income, right? And at the very worst, you're going to have more options to buy a house because now inventory is way higher than it was. Now, that's what happens if I'm wrong. What happens if these other people that are saying it's a great time to buy are wrong? What happens if they're wrong? Tragedy, foreclosure, being trapped in your house, making horrible investments. Do you see here? Do you see the different levels of if I'm wrong versus if on the other side of the coin, if those people are wrong? So why not take my opinions to heart, save your money, get stronger income, re-budget so your spending habits are better, get out of consumer debt, and in the meantime, if you're impatient like I am, love yourself. Love your family, take them on a picnic, take them fishing, do something like that, but don't get consumed with thinking you're missing out right now. Anyways, you guys, that's today's video. I really hope you guys got some value from it. Now, if you're out there investing in real estate, I do wish you luck and I hope you win.